Yo, what is going on, guys? So, we are looking at the top down analysis, what I look for on a day to day basis. I more or less eyeball this these days, but I'm going to go ahead and just mark off some key weekly levels. That way, you guys can get your eyes on what I'm looking for. So, this is a weekly. Down here is a weekly. Right here is also a weekly level. And we're going to move just right along this deal. Um, Down here is even a weekly now. You see where current price is. We're not even down here in the 4,000s, but you marked them anyway, obviously, to make sure that you have them plotted. We can put another one here. Let's see here. Let's get in here a little bit closer so we can really see what's going on. Um, Again, guys, this is about precision, so you want to make sure that you're putting, the proper lines there. That's why I'm just eyeballing it to see if I would really even plot that. Let's just keep moving. Those are the weeklies. Let's go down to the 4 hour. All right, and again, this is all about breaking down the strategy so you guys can see what's going on as well. This is just more or less for beginners, so I want you to know that I can eyeball it a little bit closer. I don't want you guys to be so fixated on what levels that I'm actually that I have here, but I want you to think more or less about, okay, this is what he's looking for. That way, you guys can get an idea. This is a 4 hour level for sure, so we're gonna mark that. This is a 4 hour level up here. A lot of support, a lot of resistance right there. Here's another level right here. We just move right along. Here's another level right here. Another one right up in here. I mean, now you can see we've got a little bit more of a full picture. Let's put a couple down here just so we have. There's one right there. And we can probably find one right in here. Boom. All right, so that's plenty. So now you've got the 4 hours and the weeklies plotted. Now we go to the 1 hour. We get down to more of the nitty gritty, and we look at kind of intraday supply and demands, if you will. So I'm just plotting like the big levels, right? Where we could get some reaction, where we could get some pushback. So there's a lot of resistance up top here and support. So I would probably put like a miniature box right up in here. Let's just make this gray. Okay, or let's make it black. Boom. All right, kind of a dark gray, black, whatever. If we get back up here, and then down at the bottom would be, I mean, I don't know if I would even go quite this low, although there is a lot of like, consolidation here before we pushed out of this hole. I'd probably just pick this line right here. So I'm just going to copy this box and drag it. And then I'm going to put one here. As you can see now, you've got kind of like this level playing field of if we hit down up in here, it's a possibility that we bounce and come off of here. Supply and demand is another trading strategy that you can play off of. I don't think it's the only thing you should play off of. I think that's the mistake that people try to find something that's so easy. Not to say that it's not successful, because you can definitely make money doing it. And it does allow you to have a big, risk to reward, where you have a very small level that you'd be risking. Let's say if I was buying here at this level, right? Let me get an arrow. If I was buying at this level, or not. Come on, guys. There we go. If I was buying here, somewhere in this area, generally, if I put the stop loss below here, this is what makes the trade. If it goes underneath this tells me that the trade is no longer valid. So I shouldn't even be in the next trade. So this is why it helps when you're doing supply and demand trades. But that's not my sole focus. I just want you to see what we're looking at when we plot supply and demand. So if you go up here a little bit higher, I mean, surely I could put another box up here, even if I wanted to take it one more row up. I'm going to drag this one. Boom. See how this kind of is carried out to this little level right here. So if it went up above this area, then we'd be looking to go where? Up here, where the other resistance is. Now, in theory, it could be here even. Yeah, we had a breakout, but look where it's smacked off of. Boom, 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 multiple times. But for now, we'll put it here just to give it a little bit of space. But I want you to understand that the 1 hour is just kind of like, okay, we can look at price in a range of, let's get the actual numbers here, in the range of 100, 115 points. I mean, not bad at all. Or $116, I'm sorry. So my point is this is a situation where I want to be able to take a snapshot of this area, this entire box. Let me see if I can grab a rectangle here. This entire box, I want to get, okay, where do I need to go? Where is, the general bias? Are we up? Are we down? Are we buying? Are we selling? It's a big tug of war, and I need to be on the right side. That is essentially what you're looking to do. This is the 1 hour, okay? Now we start to go down into the 15-minute. And then so for me, now I start to look at, intraday supply and demands. I look at fair value gaps. So now I'm like, okay, boom, I bust out the extension right here, the rectangle. I extend that bad boy right. And until we go and fill that gap right there, okay? Now, normally I do make these gray, so let's make these a different color because I don't want to confuse you. Let's make these like a light gray, okay? And I know it's very hard to see, so let's do a different color. That doesn't work. Let's go green, and let's go red. So I would be selling off of those. I'd be buying up here, but these are the fair values. Notice that was not completely filled. You see that little gap right there? That needs to be filled in order for it to be an efficient market, for it to, go and fill inefficiencies. So I'm literally just looking right along, and I'm looking to plot all fair value gaps if I can find them. So typically that is a 3 candle situation where, like, for instance, 1, 2, 3. Look at this right here, here to here. And then again, we're going to extend this all the way right. Boom. Now notice it went into here, but look, it didn't close below. So it's telling us right now that buyers are still in control, but this is able to give us a good idea of what we're looking for and how we want to go ahead and attack this moving forward. So, where else? Okay, like for instance, this right here would be an inverted fair value gap where we went down, but then we also came back up into it. So this tells you normally these are strong buys typically, but notice this thing fizzled out once we started to get up here, and then we turned back over and came back down. But I still plot them anyways. I want them there because I want to know about them. Because fair value gaps do need to be filled. This one obviously was filled, so we can kind of scratch this. This one also was filled, so we can scratch this. But as they start to develop, I want you to know that those are things that are plotted and are very important to my eye that I want to see is there. So we went down, right? And now we're coming back up. We didn't quite get all the way up here to test this. So, I mean, you can put like a miniature little fair value gap right up in here, boom. And obviously it touched it, notice, but it didn't come all the way back up in here into that like 50% line or up here. So I'm going to plot that. I'm going to have that there going, okay, well, if we're using this as a resistance, then I know that, okay, sellers are, in control, but I would like to see this thing get underneath this level here before I ever take it down into these liquidity zones down here. Because below lower highs, guys, or higher lows, there are liquidity. Down here in these areas, like 1, 2, 3, there's liquidity and stop losses and buy limits sitting down in here. So you have to be aware of this and go, well, where would the market go? It's the big tug of war, and this is obviously run off of, majority of the time, algorithms, but obviously there's a lot of big players, institutions, and banks in the market as well that are, running the game, and you have to be on a flow with these moves and get out of the way when you're in those consolidation ranges that I was talking about. You don't need to be in this choppiness right here. Chop, 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 chop. You need to be out. This, when we finally break through, because this doesn't even count, even though we're falling, because it could easily have turned around and gone right back up. You need to wait till it breaks out of this zone, pushes down, confirms, and then you might be able to take this little play. But otherwise, I'm going to wait until we retest. Look at this. It tries to enter back in. Sellers go, no, we're still in control. Now we start to make lower highs, lower lows, boom. And then now we start to get a nice turnover and it starts to fall. But look at this. One more time. You could have caught this and been out of the market. Look at this. Cha, 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 cha. You need to be out. Push up. I don't know if I'm necessarily buying this because I don't know for sure what's going on. Yes, this is considered a breakout above the, highs. So you could take this, but this could very well fake you out on a wick and just continue to go down. You would have got smacked. Look what happens afterwards. You get buyers back in. They drive this price up, back up to this resistance right here, and then they go ahead and turn it over and dump it. So I'm not telling you anything, new or in hindsight. It's like, oh, Julian, well, that's so easy for you to say after the fact. I understand that. I'm telling you what I look for when I'm in the market on a day-to-day basis. So, like when I'm looking at the fair values, that have not been filled. So let's go down further where price has not yet gone, okay, or has gone and kind of run away from, and there's still gaps. So take a peek right here. Boom. Look at this. Right there. Look at that. This thing, I'm going to zoom in there for you. That has run away and has not come back yet. Boom, 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 boom. Keep going up. Boom. Look at this. This filled. This also ran away, but look what happened. Comes in. Look at that wick. Look at that wick. Perfectly. Kisses it. That is an efficient market, so it comes back and tests inefficiencies. Well, this is also one of those cases. This is all the way down at 554.22, but when I back up away from where the market currently is, yeah, that's quite the ways away. But you have to plot those things because that is very well where a market wants to come back, test these, you know what I'm saying, and touch these inefficiencies and grab liquidity on the way. There's liquidity zones in this area, in this area, in this area, underneath all the higher high, higher low, higher high, higher lows. So stop losses are under here, and they want to grab all that as they go along the way. So they don't do this to, oh, well, we need to do this slowly so everybody doesn't lose money. The goal is for you to lose money. So you have to be very, very tedious about your entries and why you do the things that you do, and making sure that you have your stop losses set tight, because otherwise this market will just eat you up and spit you out. So those are some fair values right there on the 15-minute like I was showing you. We could obviously continue to move right along and find more fair values, but I wanted to show you that. We're going to go down to the 5-minute, and guess what I'm doing? I'm still looking for fair values. Doing the same exact thing. Look, one, pull it down, boom. Well, that was filled. Look at that wick right there. So if I were to draw this for you, I'm going to show you why we're going to cancel this out. Boom, right there. That's where that next sell candle showed up. These are buy, buy, sell. Put the candle, or yeah, put it right on the top of the candle. Look what it did. Boom, kissed it. So let's get it out of the way. Boom. So now we're starting, though, to get in these time frames where we start to look at intraday supply and demand levels. So I'm going to look for essentially like a doji candle with an engulfing. Okay. So here's what I'm looking for. This is a 5-minute one, and I'm going to make this like a green. Let's make it a blue. You see this candle right here. And then I want you to see the engulfing of the following candle. That's very important here. One. Drag this down. You see I take it from wick to wick. I'm going to change this to a blue just so you guys can visually see it. Okay, boom. All right, so boom, that is plotted now. All right, now I know that this is essentially at like an intraday demand level. Well, what did it do? It came down, it kissed it. First touch is usually a rejection, and it pushed right back up. So now we're trying to find a 5-minute supply level. Okay, well, this is a fair value, so don't get confused. On the 5-minute, or excuse me, this was on the 15-minute chart. That's why it doesn't look, very clean. But when I go back to the 15, look, you remember that. Boom, right there. So it's still respecting that level. Now look at this. This is one that calls for the 15-minute area. What is this? Doji candle with an engulfing that swallows up the entire thing. Boom, drag this down. But it wouldn't be blue. I would color coordinate it because I want to know how extreme it is. Let's make that purple, let's say, for the 15-minute. So that right now is playing as the intraday supply level. So that means it can get all the way up here, get back up to these highs, and as long as it doesn't close above and the candle's not sticking out, not a wick, but the actual candle, then it can have potential to go back down and play into these intraday demand levels. Again, we're talking about two different time frames. I know this is a little confusing. This is a 15. This is a 5. Okay, and this right here is a fair value gap. So I know it's a lot of boxes, but you guys, as you see it more and more, you start to understand, oh, okay, this is why I'm doing what I'm doing. So let's go ahead and try to zoom right back down. Now look at this. Here would be your next box. I know this seems like a massive box, but look at this, doji, and look at this candle that swallowed it up. So wick all the way to wick. Boom, that's a 5-minute. So that's not going to be purple. That'll be blue. This thing has the ability, hear me carefully, to go all the way down and make a candle that goes all the way down in here, grab this liquidity underneath these liquidity zones, and then shoot right back up and do this right here. And right when you think, okay, we're going low, and goes and makes higher highs and just continues on its way up. So this is what these zones are here for, guys. They're like little protection levels for you to know if it trades off of this supply and kicks it down into my intraday demand, I'm literally selling it in this area right here. right into this zone from there to there. And when it kisses that right there off the demand, I actually have no idea that it's going to stop there or continue and break through underneath to all these new liquidity areas. So I have to be able to take entry, exit, entry, exit. And if it breaks through and I get continuation, entry, and then bring it down to the next box. And what am I looking for though in each one of these? In order for me to find out what the intraday bias is, I am trying to identify, is the candle like this? Is it sticking out? If it's sticking out, now I know that buyers are in control and we start to build with another candle right beside it, and then we're onward and upward. But if we, close below this, let's forget about this big box here for a second. Let's cancel this one. See how that's sticking out now? The next candle does its absolute best to try to go up there and get back up inside of this little consolidation area right here. And it opens below like this. It maybe goes, it wicks, and then it just continues to go downward and make more sell candles. Guess what? We're taking this now into the next level. And where would be our next liquidity? Look at all this, these wicks right here. So this would be a level of interest. This down here would be a level of interest. This down here would be a level of interest. This right here would be a level of interest. So now you're getting what I'm looking at. So let's back up for a second and look at all this. Notice how this is turning into a consolidation zone, and look what it's doing right now. If we do get below this level, then this is when we start to look at this. But I need to see this candle poke out underneath this 54.74.50 area for me to actually consider it. If we only get, and I try to jump the gun early and go, you know what, I'm just going to get it in anyway, what happens? You get one of these massive wicks like this, and then guess what it does? See you later. And it hits your stop loss and runs the other way. So that's just an extra confirmation. You have to be patient and wait for that thing to develop. So now we're going to go down. There's not very, very many levels here, obviously, that we can get our eyeballs on, but let's go down to the 2 minute. Guess what we do on 2 minute? Now we look for even more intraday supply and demand levels. So guess what? I like 2 minutes and 1 minute because I do execute trades very quickly. So I'm going to take these off super quick. I'm going to show you something. I'm going to keep the red one because that's the fair value gap. I'm going to take off this 15-minute one. I'm going to show you how we really get down. So check this out. So right here, I'm looking for my first zone. Boom, found one. Engulfing, Doge candle, and my 2 minutes are always yellow boxes. Boom. So I'm going to make them the colors I normally plot them. So forgive me for this. This is a 15-minute box. I usually just make this gray. Fair values are always gray for me. But I didn't want to confuse you at the very, very beginning. So, boom, there we are. There's my supply. So what did it do here? Kissed it, went up. Kissed it, went up. Did it close below it? No. Those are what? Wicks. Those are not bodies. So that means this is still respected. When we get below this, what's the next level of interest? Well, let's look to the left and see if we've got any engulfings. Do I see any yet? No, not yet. Not yet. Not yet. Boom. Bingo. Watch this. This is why I have the box extended left. Boom. We're going to make this yellow because obviously this is an intraday supply or demand level. If we go below this level, do you see what we're talking about now when we start putting things together? This is a level of liquidity. This is a liquidity pool that it can grab from. Well, this is also an intraday supply level. If we drop below this level, which it looks like it's going to show us right now, and we get underneath this, where am I taking this to? Well, if I get the candle to close under this and the body sticking out, and then it fails to get back into this consolidation zone up here in this area and goes down, I'm looking to sell this down into this area right there. Now I've got my stop losses above this area because if it gets down into this box, I need to be out of it. And then I have a nice reward down here into my next levels where we've got indecision candles. And it looks like it might show us that right now. So then I get into the 1 minutes and I get even more detailed. And those are orange colored boxes. And I do the exact same thing. I look for those doji candles with the engulfings around them. Let's try to take a peek here. I know we've got a lot of consolidation. This is also after hours. So, we're not getting tons and tons of volume in. But look, here's perfect examples right here. Boom, boom. What is this? Look at this. Beautiful. We get a sell-off. What does this do? It tries to go up there, kiss it, and what does it do? Rejects and comes right on down. Now, this is hitting this level, so what's it mean? It has all the ability to bounce off and go up here into this 79.25 area. If it breaks below this, where are we going? Down below this area into these next boxes. Now, let's see if there's other zones to the left, though, that we might need to be respecting and focus on as we move forward. You see that hair mark right there? That's where price currently is. Oh, look at that right there. Beautiful. Boom. Boom. Taking it to that level. And then what? Well, let's see if we can find another one. And I know it seems like sometimes it's very repetitive and that they're stacked on top of each other, but look at this. Boom. Boom. Now, that just means that we could get all the way down to that area. We had an engulfing there, but let's try to look for another. Oh, there goes another one. Boom. Boom. Now, what's the orange? The orange is 1 minute. The yellows are 2 minutes. These other levels, these purple levels, are just liquidity areas. So let's look at where price is at currently. Look at where we're going. So I know it seems like a cluster, guys, and I really don't need both of these boxes per se. So I could take this one off if I wanted to. But if I did, you know right now that I'm trying to take it to here. If we break below this, we could go here. If we do break underneath this, by just looking left and realizing that there's not any more of those little doji candles with the engulfings going on, well, let me correct myself quickly. Boom. Look at that. So what does this mean? You see this big gap here? If we get below this right here and stick out, we are taking it to where? You got it. Right there to that zone. Sorry, that's not an arrow, but you get my point. We're going all the way to 69.75. So this is what I need you to understand. This is what I'm doing. This is how we're getting in and out. But this is also how you get in and out on range days, which what are the majority of days in the market? Range days. So I want you to understand my strategy very carefully. I want you to know that I'm looking for obviously top-down analysis, for bias, for support and resistance, for supply and demand. Yes, that's all good and dandy. All these lines are good and dandy. I don't normally plot these anymore because I have a better eye for it. But you do need to plot these if you're not sure where you need to be executing and exiting. So these levels are just higher time frame levels, weekly, 4 hour, 1 hour, supply and demand levels, as well as going down to the intraday levels to be able to identify what am I looking for, where do I want to go? What am I looking for, where do I want to go? So when I wake up in the morning, I look at this stuff. I've usually got these things already plotted. Obviously, I'll keep these levels because these are solid levels as I show you. Oops. And we will just keep this thing right along. Sometimes I like to just go ahead and do this right here and look at nothing, and I want to see just the naked chart and really see what's going on. Now look at this. This is a relative. This is not going to work because I have the drawings off. But let's take all of them off for a second. This is relative lows. This is relative highs. So what I would consider this is a big consolidation range that's just bouncing up and down. Yes, we got this break. This is a nice move. If you caught this, beautiful. But now what's it doing? Up. And then we found a little consolidation. Down, up, down, up. Now we're going to the bottom. If we break this, where do we go? Probably here. Look at all this. Resistance, resistance, support, support. Here probably. Where else? Here probably. Where else? Here probably. Look at all these wicks. What's that telling you? Price has gone here before. Where does price want to go? Where price has gone before. Because they know that there were orders down there that have been fulfilled, that need to be fulfilled. This is the things that I need you to keep in mind as you look at your charts. So guys, I hope that that helps. I wanted to do kind of a more extensive breakdown. I know it doesn't seem like much, but you do need to understand that it's about putting everything together and knowing what your risk to reward tolerance is, what your, what your you guys have obviously seen in my other videos, what I like to do, how many trades I like to take, what my risk to reward is, what my strategy is. And I just showed you obviously what I'm looking at on a day-to-day basis. When you get these little choppy moves on these little doji candles with the engulfings, these give you an opportunity a lot of the times like this to be able to go, okay, I'm going to take it from here to, and I'm just showing you something rough. I just got my eyeballs on both of these. Let's say it's sold and I saw this candle stick out, and then the next one, look, clear as day. Do I know for sure that this is going to break underneath here? Absolutely not. So what does that mean? I need to get out. But that is okay. Look at this. $1. That's a $2 move almost right there, that play. That is good stuff when you're in, decent enough size, guys. So I just wanted to go over this with you today, guys. This is today's video. I hope you guys enjoyed it. Appreciate everything. Say it with me if you know it. You are uniquely different. God took his time on you. You are one of one. Know what you did today. I love you so much. Peace.